Hello everyone. Thank you for joining us, and I also welcome the panel here. The topic is very interesting. We are going to talk about the embedded insurance, right? So, which is like uh, many of the times have been seen in a very different contextual. So, we'll try to learn from the different perspective, from the technology side, from the user experience side, from the product side, also from the investor side. So, looking forward to learn from all of you. So maybe we'll start with Rahul, you first. Yeah, from your experience or from your kind of, so much of deep work in the embedded side, how do you see this journey of embedded insurance from just a distribution channel to a kind of strategic partnership have become core area about embedded insurance? So how do you see that journey together?
So, check. I think. So, I think so from a insurance standpoint, I think so we are talking about future because the future is going to be embedded as in the next set of growth will come from somebody else's checkout base. If I just expand it, you would have booked Ola, Uber. Unfortunately, there is a strike going on in Mumbai, but you would see that's a very good example of providing insurance with a context. And the way I see is in the future, insurance will be an infrastructure provider in terms of technology, products, or any other functions that are involving, but it will not be a separate product for that matter. If I would want to reach to a stage wherein the regulator is saying that you need to have insurance for all by 2047, that means insurance companies alone cannot drive this change or behavior. And at the same time, it's a win-win situation for everyone because the cost of customer acquisition goes down. You can nudge customer at a right time. So it's a win-win situation. I think so. From a pure technologist point of view, our job is to make insurance disappear in that sense so that customer doesn't feel that he is buying insurance separately, if I would want to say it.
Yeah, moving on to you, Sorabh, from your experience, or I would say from the journeys which you have been built so far in the insurance industry so far, how do you see embedded insurance as a customer engagement layer, or from the product perspective, how do you see it?
Am I audible? Yeah. So building on from what Rahul was saying, right? It's embedded insurance is the future, and if you see anything that needs to be embedded, it needs to be contextual, it needs to be intuitive, and there has to be some sort of compliance, overriding compliance, which basically needs to be taken care of. So as we go ahead, what we've seen that embedded insurance to scale would definitely be a combination of a few things that drive it to the vertex today. In the hands of a consumer, it should work, which means the consumer or the user that's trying to kind of benefit out of the offering on the embedded insurance side should have a very seamless experience, easy to understand, and at the same time, it should be so invisible that, frictionless contextual solution, which means that underwriting would not be the way it is seen till date. We might have a product solution that would need to be, the risk that would need to be underwritten could be a combination of, life, it could be, general or in health risk combined all together efficiently and rolled up into one invisibly for the consumer on the front end. Now, that's where the power of embedded insurance will start scaling. So we are seeing interesting developments that's happening in the current space where we've been able to kind of seamlessly push forward some of these transitions as we implement our stacks or, across different distribution players at scale. And these use cases are now only early days, but are seeing stickiness across the ecosystem. So that's what I would kind of, leave here as a thought.
Sure.
If I just want to add one thing, I think so, and this is often forgotten. Wherever I'm seeing the trend, I'm sorry, but the contextual part that he kind of stressed upon, that's very important. I mean, if you are at a travel website, you want to actually offer travel insurance and not something else. So that context of knowing the customer, of intention, and then offering the right product is very, very important if you want to scale up to the embedded 2.0.
Great, thanks. So maybe a different angle from the investor perspective, Anand would like to understand from you. How do you see embedded insurance as an opportunity? I mean, so far whatever has been, developments have happened in this space.
Yeah, means I think I'm the most different one in this panel where we have a lot of operators and I'm the investor. But the fun fact is that I used to be on the other side of the table where I was running an embedded, sort of an embedded insurance company called, it's a Swedish insurance company called Milvik Bima. I was there heading them in South Asia and I was their India CEO as well. Look, in terms of investing, what is happening, whenever we look into the new disruptions or the new phase, and the term here as a 2.0, they always depend on the drivers. What sort of a new drivers are coming that there should be a new product which should become successful. And if you look at what has happened over the last 5 years, the digital pool of customers has increased. You have new affinity groups, whether it's be a, let's say, a Ola passenger or a Rapido passenger, or if you say the digital loan taker, that pool has only increased. More and more people have come into that pool. Access to data has become easy. With account aggregator and the multiple other frameworks we are talking about, that will become even easier. Third thing that has happened is that what I call APIification of the banking and the insurance industry. Insurance is still a little bit lagging behind banking and other industry over there, but now you have the execution APIs by which you can execute from the same flow as Sorabh was talking about, the contextual execution, seamless execution. Those APIs have deepened and more APIs are coming across. And finally, nobody can in this world now miss AI. So as agentic AI comes, there is a flow that you can create. This will be very contextual, which will be very seamless. Thus the drop-offs will be less. You will be able to serve the customer better. That part of embedded insurance excites me. However, what I had seen during my stint as an operator as well, and in multiple embedded insurance products, what is given back to the customer at many times is not the ROI that he should be getting from the money he has spent. What I mean by that is most of these products becomes add-on, and there are two parts of insurance. There is a fear factor which it takes care of, that if I am traveling, something happens, I will not, be in trouble. But there is always a claims part which should be commensurate to the premium part, that how much I am paying, what is the ROI I am getting. If you look at the personal accident product, if you look at travel product, if you look at the product I used to sell, the claims ratios was in single digits, which philosophically mean that you are not giving back to the customer. So what I would want from the embedded insurance of the next generation or 2.0 is essentially, can we create not only seamless distribution or onboarding part, the seamless claims part also in these sort of products, which gives it back to the customer, so that the customer, because of embedded insurance, doesn't feel cheated. Because of which, you do not have to be an opt-out to opt-in sort of a process. If you are being pushed to do that, then the distribution, instead of actually being in favor of the customer, there is some challenge. So I am very bullish on embedded insurance 2.0, but as an industry, probably I would like to see that if the product starts creating more value for the customer, that will make me more excited about it.
Sure, thanks. Thanks. Moving to you, Monish, from your perspective, how do you see this embedded insurance going as a strategically or in the long-term benefit perspective? What are your thoughts on that?
Thanks. So while we speaking about how customer journey should be seamless, it has to be seen as a strategic initiative by the manufacturers. While becoming invisible, it cannot become that we don't kind of comply to compliances. So the compliances are very important when building a product offering. Secondly, a co-panelist touched upon how do you ensure the life cycle of the entire customer experience is met at the touch point. So, and I'll more so refer to life insurance. It's not like fill it and shut it. So there is a year-on-year renewal that you'll have to think of. How do you kind of service the customer at the touch point? The customer once sold cannot be left high and dry. So how those things become strategic with the partner offering the product, as in the insurer offering the product and the partner helping source the product. So it is very important for the insurer to explain to the partner as to educate the partner, because insurance being a long-term, long gestation product needs the partner to understand that there is a servicing element to it. How do you kind of ensure that just not leaving it as giving a commission on sale and making it more sustainable from a customer point of view, from a partner point of view, from an insurer point of view, that there is a KPI for an NPS too, there is a KPI for a claims ratio, there is a persistency. So how do you kind of embed that, educate the partner and making that a seamless customer experience? Eventually, the customer has to be the person winning. Again, it is a win-win for the insurer and the partner. Those are the important things. But how do you kind of keep the trust of the customer? Because the customer is coming to an embedded platform because he is trusting or has a brand loyalty towards one of the products in which we are embedding the insurance.
Great. Just moving on to the thought from the insurer perspective, what Monish talked about. So Rahul would like to understand from you also that how insurers are looking at it for building the embedded journeys, or be it from the tech perspective, or how do they look at it?
Correct. So from a tech perspective, I think so. For a relevant forum, I think so. We are becoming more and more ecosystem based. We are becoming more and more open. We are becoming more and more modular, and in the technology term, we call it API based. Okay. So we are becoming more and more that. We are trying to integrate with host of partners, whether it is ride hailing app or it is a food delivery app. We are just, again, on the context part, we are just trying to get that integrated with us, what kind of data they collect. So that the technology in that embedded insurance, and I think so the customer experience, these are two key drivers to kind of enable it, because without that technology infrastructure, you cannot go and integrate. And I think so a lot of companies are in the last post-COVID actually. Post-COVID, if you see, there is a lot of drive on the technology front, because people have realized that the value of first of insurance, and second thing, value of technology, okay, in a level. So we are doing it. I think so a lot of companies are using data, and analytics is becoming a very mainstream in every function, whether it is risk or whether actuarial or whether it is compliance or finance. All these functions are now in their internal processes. Data and analytics is a very integral part. So that's one part of the technology which is consuming the data. The other part is having those external integrations with all the partners who can either enable the customer journey seamless, so that customer doesn't have to key in all the data. So these are the two key drivers. One is API, and the data and analytics is something which is there. I just want to, because you are an investor, I just want to add one point, okay? And just for a thought, okay? That's a problem statement, because in India still the insurance penetration is very low. So you don't know the behavior. So it is again a chicken and egg situation. You are not entering into the space because you don't know it. Until the time you don't know the space, you will not be able to enter it. So how do you kind of solve that problem? That is what we are trying to do. So what I'm saying is, you said right, that customer claim journey and all that. All of that is actually, so insurance 1.0 was there, wherein there was a focus on onboarding the customer, and people never thought about claims and things like that. And sometimes the product was also kind of missold in that sense, right? But the problem from an insurer point of view is, because it is a unexplored space, they also don't know what kind of product we can offer it till the time they don't get experience.
So see, there are, and you will know it much better than us, there are multiple types of products, right? When you talk about the core health or term life, you might have lead generation, but I find it difficult to think that it will be sold through embedded insurance. Until and unless it's not a credit life or something like that. It cannot be term life or health, because there is so much explanation, the premium charge is so high, it just doesn't become a straight through process, right? So then we come to the next set of insurance products, which are more like, I'm not calling it exactly a sachet product, but more smaller product. And like if you look at China, Zhonghan and all, they had really, or the Solve in Sweden, they had really gone for different type of products. We are somewhere in between, where if you talk about the embedded products right now, the most of them are either credit life, personal accident, hospi cash, or your travel insurance, these part of them. These things you probably do not need that much of, explaining awareness, but what happens is that you can make the claim experience much, much easier. So for example, if you take travel insurance, there was so much of talk about parametric claim management with travel insurance. The data sets are there. If my flight gets delayed, give me the money, because that's the contract you have made. But there is obviously a pressure, which as I talked about, is that, is your KPI lower loss ratio? If you are giving a 50% to 60% partner, commission, you cannot give more than 50% claim ratio. So inherently the product does not want to give back to the customer, and the product in some cases is. So what I'm saying is that, is it needed for the customer? Absolutely it is needed. Travel insurance is a needed product. Can we come to the product construct between the three partners in a way that it gives back more to the customer? Probably that thinking I will be more delighted with if that comes in.
Just to kind of add to the discussion here, because it's very interesting out here, that two aspects, right? I mean, Anand touched about the fact that insurers, by the overall genesis of the fact that they're for profit and they're conflicted in their own core offering, right? In a way, because you gotta still make margins after you've this thing, because it's a for-profit organization, and that's a larger debate. But the interesting thing to kind of be mindful of is, as we said, that there will be, as I see this is going to be emergence of two very distinct streams. One is a set of products which will be complicated for the more discerning population who have experienced insurance and would want to go further down and then get underwriting involved. So these will be these complex set of products, and that will be treated separately. And the other stream, which will fall very well within the bucket of embedded insurance, which is where we are kind of, flirting around with whether it's sachet or it's attachment or so on and so forth. These all will mature into what we call as the embedded insurance segment, where you will have data, technology, right underwriting, and a mix of product solutioning happening invisibly well as we go along. And that's where we see this stabilizing. So I think we are kind of moved in the right direction today. We have a stack. We have multiple ways of kind of technology from the insurer standpoint also. Insurers are now building unified APIs, which can go back into these stacks, which weren't available earlier. Customer trust, because there are brands now, adopting insurance, embedded insurances in their core services and products. That trust is coming through. Customers learning on the back of this, because there's education happening by the virtue of use. So it's all moving into the center of the vertex, which is where we see this happening very, very beautifully and comfortably as we go along. So that's where I would kind of tend to see the next 5-7 years. on embedded.
No, that's pretty interesting. But just coming back to the current situation, because there are some of the challenges which are being also faced, right? Where the current industry is going, or currently what the phase we are going through. Of course, it's a phase of maybe 2-3 years in the longer run. But yeah, there are some challenges which are still exist in the embedded insurance experience perspective, be it from the integrations perspective, from the tech side. So how do you see overall, and how do we solve it, or how it is getting solved?
Again, we touched upon this. One of the problems that exists is the unified APIs, which basically they weren't available. I think as we go along, there is maturity that's happening in the tech stacks at the manufacturers and the insurers end. There's fair amount of investment that's happening around there. With that, not only that, but there are a lot of Insurtech stacks which sit right in the middle, which help orchestrate, whether it is a headless journey, which is embedded into the product and the service core, or with the journey which has a head. But with that and the artificial recommendation that is required based on data, science, all those capabilities now available. We've seen over the last 3 years, the adoption rate of embedded distribution across the distributors has gone up almost by 300%. By this, I would mean that if there was one customer looking at experimenting with embedded insurance, 3 years back, today, at the same time, we're seeing more than 3 in that category. So that's a healthy sign, and also benefiting out of that. What's also happening is there is fair amount of education and learning, which was where the problem also exists, because the customers, at the end in the hand of the users, if I don't understand what I'm subscribing to, it's going to fail, right? So, which is where, to Anand's point, claims comes in very, very important. If I don't understand and if I get gratified by the claim being adjudicated very quickly, then I know that this works. So I will be interested the second time. So all of these things are now being worked upon in tandem. Problem statements, yes. All of the solutions that exist in the market do not provide it, but there is a lot of work that's happening, and we see this seeing the light of day in the next 12 to 24 months. So that's very encouraging, very motivating from the embedded insurance, problem statement standpoint. And the other one is compliance. So the regulator has been mindful, like it should be, because you're kind of making promises, and these categories are not very simple to kind of underwrite and understand by the end users. You have opt-in, you have data security, you have DPDP, all these compliances that need to be taken care of. So how that can be invisibly baked into this journey is going to be important, and that's all happening right now. So these are problem statements that I believe where the ecosystem is working very well on together. Earlier it was very broken. I think there's concerted effort that's happening on this front.
Super. So Anand, just coming back to you, from the investor's perspective, typically what has been looked after in the insurance? Is it from the distribution perspective, or is it from the kind of the depth it has into the distribution, or maybe it is the margin? So what is typically been looked into?
No, you are asking for specific to embedded or insurance overall?
Embedded perspective.
You see, embedded is as I mentioned, while I was vocal about what I would expect as well, it's a great way of distributing insurance. Finally, insurance as a product, net is good for the consumer. That's why it exists. Like, for example, if you take credit life, it's a much needed product for most of India, which is, let's say, going for a high ticket loan or something. If something happens to that person, and the family in the earlier case was needed to have to pay, or in the other extreme case where the government was so pro the consumer that it will say that, okay, the loan will be washed out, then that also adversely affects the financial system. So the insurance products in most of these cases is a much needed insurance product, and embedded will be a very, very how to put it, very, very efficient way of distributing this product, because more and more India is coming digital. That is where I feel very, very positive about embedded insurance. And I believe that what will be needed is a little more, how to say, like little more APIfication, which Sorabh was talking about for the insurers, more towards compliance, as well as some degree of regulation, where you let the customer understand how they can use this product if something happens, right? Like simple things, if you have a credit life, if something happens to the person, does the nominee know also? Has it put the nominee? Simple things like that, when you create the customer flow, overall net embedded insurance, specifically in India context, has a huge role to play in future, and I'm pretty bullish that that will happen.
Sure. Monish, coming to you, from the embedded insurance partnership perspective, what do you think, what are the capabilities insurers should build upon? I mean, across tech we have heard, maybe from product and services perspective.
So just adding on to the tech part, there can be kind of SDKs which can sit along with the embedded journeys, apart from APIfication. Additionally, from a product point of view, it cannot be a standard traditional product being offered in as an embedded product. I think again, they're touching upon how an underwriting will happen, how a seamless claim will happen. So a traditional product will not be sitting in there. So we touched upon some bite-sized products, some sachet products. That is very important to be carved out for a space, very personalized for the embedded journey, so that it can be made contextual with data, with ecosystem information. So while there is India Stack providing KYC information, there is a financial information, and there is very recently there is ABHA coming up, where there is a medical information which is available. So combining that, the product should give a seamless buying experience, and eventually the claim is the proof of the pudding when the claim has to be done right. From a process point of view, the insurers have to think of it as a different product, a different mindset change. It cannot be that the same back office or the same systems can be catering to a sachet insurance, because it is very critical for a customer experience, or for that matter partner experience, as to what is the turnaround time for any request. So it cannot go into the same funnel as any traditional product. That's where the mindset change, the process change has to be clubbed along with the product and the APIfication.
Sure. Coming to you, Rahul, we quite touched upon the compliances part, right? So how do you see the impact of DPDP and on the embedded experience perspective?
There is a big impact. So yeah, there is an impact. I mean, it is always from an insurer point of view to have more and more data, okay, to kind of tailor the product according to the need of the and behavior of the customer. But yes, we cannot have endlessly the data. So yes, there is a big impact, and every insurance company and the partnership ecosystem have to kind of mindful of the data that they are collecting, how they are storing, how they are processing, which people have access, why they have access. So all of these questions companies are trying to answer. And I think so DPDP in a true essence will change the way currently insurance is being sold. Okay. It will be a very big change. A lot of traditional players have to relook at their, the point of sale to the back office, because a lot of it have to be re-engineered in the technology sense. It has to be re-engineered to cater to what DPDP is saying.
So if I can add, see, there are a lot of outsourced players involved in any insurance process. So there is a guy who's printing it, there's a call center. How does data go from a manufacturer across to these third-party data service providers? The manufacturer needs to know, because the responsibility after DPDP is for the manufacturer to kind of to take care of that data. So he needs to know exactly where this data is going, how is it getting handled, once it lands into, say, like a call center, what happens to the data? Once the process is over, where do we kind of restrict to data masking, to kind of purging? What is the purging policy? So Rahul touched on every process needs to be re-looked at, and even it could be that even the contracting with every partner needs to be re-looked at. Some of the outsourced guys may not be able to kind of cater to the kind of provisions the DPDP is. You'll have to kind of redo those things, get out of places where you are not confident about your data being secure, because the responsibility is with the manufacturer.
So to give you an example, typically, I'm sorry, I'm mindful of the time, but to give you an example, what DPDP says, that if you are adding a nominee to an insurance policy, and nominee is major, that means you have to collect the data of a nominee. You need a consent of a nominee. So that will fundamentally change, though it seems like a very small point, but getting a consent of a nominee to add a nominee in that same policy will be a very fundamental change. Okay. Yes, thank you.
So coming to you, Sorabh, just to continue on that thought, right? So how do you see this is getting aligned from the journey's perspective? Because currently you also mentioned about regulatory compliances being supportive, but how are they stepping up to build a holistic embedded insurance journey so far?
So like I said earlier, on the compliance front, as these compliances shore up, we have to work together with not only the distribution partners, the insurance companies, to basically come up with a solution that's kind of seamlessly workable, right? And in this situation, you cannot do this at a standalone because you're sitting right in the middle of the overall value chain. So I think the answer here for us is that for every compliance that's come around, there has been some answer or a solution that's been able to kind of, a resolution that has been found. And as we go along, what we've done, whether it has been, for example, the opt-in to opt-out kind of one of the compliances that came by for that, that also like shook the embedded insurance industry at scale. But there are ways of kind of, even bringing back your penetration levels in the rightful fashion. If you were to kind of move from the opt-out to an opt-in journey, and that was beautifully done just by kind of trying to see how the consumers are being touched upon, communication is being done, products being highlighted, when the drop-offs are happening, the engagements come in place. So all of those things are happening. And that is one part of the way the compliance has been developed. So it's ultimately, we are trying to draw a balance between, user experience, the access to data based on, compliance that is available in the ecosystem. And the third thing is basically trying to actually get the customer to share that proactively. Now, supposing if we know for a fact that when you are adding a nominee going forward, there would be a requirement for that nominee to share consent, you can trigger workflows by adding that as a part of the workflow. So we are proactively working on those kind of solutions.
Oh, definitely. Anand, from your perspective or from your experience perspective, typically what are the monetization models you see working out in the embedded insurance and that should be looked upon?
So I think actually embedded insurance is for monetization. Most of the time it is a very, very profitable, if I'm not wrong, like as a business line, as long as you get the affinity and the attach rates right. So if you get that right, then the claims rate, it can become a win-win situation for all the three parties actually, the tech provider, the affinity as well as the underwriter. In many cases I have seen that also that the embedded insurance comes as an add-on product also, where you are, let's say with a group, you have a partnership because of other products, and that in a way, what I'm trying to say is that the embedded insurance can be an enabler for other product as well. So let's say you have a product which because of something like you are running at a certain price and then you have lesser margin, and then you have for the same affinity group embedded product which becomes the margin driver. As a combined, the whole value prop becomes feasible. And we have seen models around that. But net, the question around embedded will not be around margins, but it can definitely be around scale, where because the pricing, as you embed it, you cannot create a pricing friction or a paywall which makes a fall through, or the attach rate does not go through. So the questions that will come typically is around scale and not around the margins. But globally, you are seeing embedded insurance. For example, Cover Genius right now is around 70 million revenue, mostly from travel, mostly from Booking.com and Expedia, and that might be the first embedded insurer enabler which will go to IPO. So you are seeing that people are scaling also with that model. However, that will be the only question mark compared to the margin structure of the business, if you ask me.
So if I can add, the large part of the cost for the insurer is getting away from embedded, because there is no marketing cost, there is no distribution cost. It is adding or riding on as an add-on. So that's where the price sensitivity plays very well.
And you face that because, like the group with, so basically what is happening, you are embedding into somebody else's flow, somebody else's customer. They want to squeeze every penny out of it, right? When I was on the other side, I used to partner with telcos. Indian telcos were notorious. They were asking for 80 to 90% of this one. So where is the value I could give to the customer? All the points I'm trying to make over here. So that remains, because most of the embedding, when it happens, in many people's journey, it's never the core product, right? So they will try to see it also as an add-on, and they will try to say that, hey, I'm exposing my customer to you. You are going to get this one. I want this much. If it is not, I do not want to bring an extra friction for my customer, because it's an extra product which is being added. So there are places where it will become much more seamless. For example, Cover Genius, why travel is working? Because travel, it's actually a value-added add-on to the guy who is also selling. For Expedia, it makes sense that their customer gets travel insurance. Otherwise, there will be a challenge. So those use cases where the affinity group actually gets the value out of the insurance that is being attached, you will see it picking up scale, and that's where the product journey has to be mapped to that.
Exactly. I mean, Anand, to your point, the real embedded is when the customer really sees the need of it, right? And to make that happen, while supply would initially should create that demand, but it cannot be the way it will be driven. So supply is where it will kickstart, but demand will actually be the one which will actually stabilize the embedded market, because if the customer doesn't see value, it's just a flash in the pan. That's what we've seen before as well. So hence, coming back to the same point of super contextual, right time, right place, at the right price, and without pinching. So if you put yourself as in the customer's shoes, anything that we would want to experience, right, and say that, yes, this is value for me, and I don't mind spending this X amount of rupees to get it in my pocket so that I'm not anxious enough for this risk. That's the most logical way of thinking about embedded. Yeah.
That's it, where it goes from pull to push.
Yeah. Push to pull.
Yeah. So maybe Monish, from your perspective, would like to understand as an insurer how this strike through between the experience balances should be done, so that for the embedded insurance perspective, it will be easier to scale, or it will be going on to the path of scale. So how do you see that balance between the partnerships as well?
So when designing products or processes, it has to be compliance by design. So you have to think of the entire implementation as compliance by design, look at the regulatory framework, what fits in, what doesn't fit out. Very clearly call out what is the customer getting into. Again, embedded, while in certain embedded senses the product becomes invisible, but the customer needs to be clearly told that this is what you are buying, so that there is minimum missile. I think we touched on educating the customers, educating even the partners who are embedding that in the journey to call out the right disclaimers, the consent management framework. Uh, and again, it's not just about one-time sale. So how do we kind of keep it compliant? How do we kind of have the persistency going on? Because till the customer keeps paying is where the customer really benefits. So it is important to kind of keep it under the regulatory framework whenever something is being designed.
Sure, sure. So, thank you for all your insightful thoughts. Maybe we'll pick up one or two questions from the audience side, if there are any questions.
My name is Sudash. I just have a query for the panel. Why do you guys think the regulation is being looked at as or being complied to? For example, in that example of nominee, why can't we treat it as a marketing expense and cross-sell at that point in time? What is your views on that?
Can you please repeat the question?
No. During the regulation point, one was discussed that when regulator says that nominee consent has to be got, why don't we treat that as an opportunity to cross-sell or sell something
That
to the nominee?
consent, that consent will also be required.
True, but then it can be marketing expense rather than your. And what are the views on about
That's
that in the
a
panel?
fundamental treatment. So the point is not how it has to be treated. The point that I was actually highlighting was, how many of actually wake up every day and say that today, hey, I want to buy insurance, right? It's a push product, okay? So even now with whatever people have been trying to do since year 2000, they are trying to ease out, put a lot of customer education, but still we as a culture, we have to accept that the penetration is still 3%. Okay, so so that means making it more and more, adding more and more steps. There will be few people who will say, oh, why should I do it? So that's the only point. But I think so. It's a right step in the right direction. We should do it. Okay, there are a lot of cases that we hear. So DPDP is important, but yes, the treatment of how it has to be booked as an expense is something that CFOs will really decide.
No, not only that, I'll add on to that, because what happens with those sort of steps is that it's a product which is so easy to push out. You'll say, okay, I'll come back and get the nominee thing filled.
Correct.
And that will have a funnel drop, which will increase. Rather, that will not be a marketing opportunity, that will be an increase in marketing cost. And I was talking to the regulator, and the regulator was always talking about, this much goes away to the distributor, this is actually a waste of, and then when we include steps which makes more money go as the revenue pool to the distributor, that is a revenue pool which is not going back to the customer.
Correct.
So more the friction we add, I actually could not quite get your question that how it can be used at marketing. But one thing which it will definitely do is that increase the marketing cost and the distribution cost of insurance.
Definitely.
So putting a consent and taking a cross-sell opportunity is an implementation that the insurers will look at. But it's a friction. The DPDP, the example which Rahul was giving, the DPDP is giving a friction to the whole journey. How is DPDP impacting the whole journey, wherein we are trying to reduce the friction? It is adding to friction and the experience.
Some of these things can be, when you're doing the first consent itself, there could be workarounds, and I'm sure, in India we're not short of creative ways of jugaad. So I'm sure there will be one that will help solve this one as well.
Hi panel.
Can't identify who's...
Hi panel. Yeah. This is Bhanu. My question is on the product construct basically. So when we talk about embedded insurance, we only talk on maybe say PA, travel, hospi, cash. So from last 6 to 7 years, I'm hearing the same products. You know, are we doing enough customization in terms of product? And also, my other question is, I think, why is gadget insurance, mobile insurance not, penetrating much in the market? Everybody of us having mobile phones and laptops. So I think the premium cost is pretty high, more than 12 to 13%. So yeah, my question is on the product customization. Are we doing enough product customization?
Hi, Bhanu. It's a great question. And, you know, when I'm tired of listening to the same examples that be spoken about, but I think those come about easy to talk about. So it's not that the industry has not seen innovation in products that have been created on the embedded side, but they have not seen those innovative solutions scale up as much, right? And at the end of the day, if you have to see each product or proposition from the standpoint of risk. So if there's the underlying risk that can be underwritten, which could be covering, say, an asset, or in life, or in incidents, or health, etc. But then in normal parlance, these words are accident, health, life. So the simplification of matter has kind of made, there's a fatigue that has gone around in the industry about, there is no innovation happening.
Right.
So there is innovation happening, because if you see most of the embedded insurances that happen today are under the group platform.
Correct.
And the group products by nature are filed so that they can bring flexibility in terms of what can be added and what cannot be added, how they can be priced, etc.
Yeah.
So those flexibilities allow a construct to vary. The beauty of this will happen is when you can create a combination, which is also happening today, across, which is a hybrid of life, pool risk to a health pool risk to an accident pool risk to an asset pool risk, all clubbed together, along with an services or an assistance service kind of a solution, which is all mixed together based on a persona type. Now, that's where the industry will find some uniqueness in solutioning. And to your point on gadgets and attachment on that, that's happening across the board, right? And that's not only done by insurance companies, it's done by, assurance players, assistance services players, because it falls in the bucket of extended warranty, assurances, etc. Fair amount of penetration is happening on that front as well. So newer categories emerging, not so much being spoken about. That's probably the gap. I envisage that could be the problem out here. But yes, it's not stuck in a time warp. That I promise to you.
Sure. Yeah, I'm from the product team. That's the concern.
I understood that.
Hi, I'm Meet, and so when we talk about sachet products, because the premium is low, so the success of the product depends on the volumes. But there are limited number of partners which can offer such volumes to insurers, like let's suppose ticketing platforms or cab aggregators, super apps. So how can we open up new avenues for sachet products in the future?
That is what probably we kind of touched upon in the very starting, that insurance companies have to act as a platform and the contextualization again. So whether it is a travel website or either food delivery app, or now currently I don't know how many of us know about the government-led initiative called ONDC, okay, which is an open platform. Okay. So a lot of these initiatives or the companies have to talk to each other. I don't think so from a technology standpoint it is a problem now. Okay. So now the right infrastructure is available, the technology is available. Now it is up to the product teams to kind of talk to each other, finalize it and take it forward. Does that address your point?
Yeah, thank you.
Thank you everyone. Thank you for joining us. Yeah, I will proceed.